Gold went from 2,500 to 3,000 in 213 days. That's the fastest $500 price jump in history, and most of the people that I'm talking to that bought this stuff a year ago are still down. So figure that one out, right? The fastest $500 jump in history in the last 213 days, but people buying a year ago, these products are still down. It should not be that way in this industry. If gold moves up 1 or 2%, you should be up, and not down on what amounts to a very significant increase in the price of gold. So, who knows as far as confiscation. I have a hard time believing that we'll see it again. You have JP Morgan as the primary custodian of SLV and GLD. It'd be much easier to take those two funds, the lion's share of gold and silver held in a couple of funds amongst the others they are in custody of, along with BlackRock, without going door to door to take what amounts to a drop in the bucket in terms of what the American public owns. And you have the Shanghai Gold Exchange and the gold accumulation programs that the government is running for the people through the Shanghai Gold Exchange. They're promoting gold in China. You look to Russia; they've slashed or got rid of the duty, if you will, I guess it's called, or any extra tax that the people have to pay to own it in Russia. That's gone. They're promoting it to their citizens. You have countries around the globe, even those that we would consider to be a step or two behind the freedom we find here, which is probably silly to even say that, but these countries are promoting it. It would be the death knell for the dollar and everything we stand for if we took gold from our citizens, and we already are having a hard time inspiring trust for people to take our treasuries. If we activated eminent domain and took gold from the public, it would be, I think, a very bad day for the United States and our prospects of retaining the center of free trade globally. So I don't think that'll happen. It's too easy for them just to take the ETFs, but that's speaking to jurisdictional risk. You could dig a hole in your backyard and become a midnight gardener if you're really that concerned about keeping it in your house. I get it. If you want to move it into storage, we've partnered with Brinks and we've worked with them for going on 17 years. I've never seen an ounce out of place, raise my voice for a second, or question anything I've ever seen there. I've taken part in dozens and dozens of audits with the third-party auditor. They do things the right way, and we have facilities in Canada, in Toronto, Vancouver, Montreal, in the United States, in Texas. We're the only ones there at this point right now. Miami, we're the only ones there. New York City, Salt Lake City, and Los Angeles. I choose to work with a company of that integrity, a Fortune 100 style balance sheet, 100-year-old company who has never had an attempted break-in in any of their facilities. In a world of imperfect choices, it's as good as I find. I would stay away from private facilities in strip malls that these things that they use a retina scan or whatnot. These small places that I just think that it lacks the security, it lacks the infrastructure. Certainly you'd want to make sure everything is insured and whatnot. For me, storage is about knowing the location, having the ability to retrieve it, making sure that the assets are completely segregated and fully insured. I don't think that anything fits the bill quite the way that our Brinks program does. Well, like I said, there are easy ways to hide this stuff in your home, bury it. If you get past that and still need to use storage, contact us. I truly do believe that our storage program is by far the best in the industry, and I do believe that, and I'm not just grandstanding, whether it be through the way that we have a fixed rate program that others don't have. We have a safe deposit box program in Toronto and Vancouver that others don't have, and access to Dallas and to Miami that others don't have. That's just the beginning. Reach out to us. Our Brinks program, I believe, is as good as it gets. Yeah, I mean, one of the things that people are talking about is the amount of shorting that we've seen in PSLV, that it got absolutely crushed in terms of short interest in a matter of an hour in 1 minute you saw, literally thousands of shares dumped onto the market, and just like that, maybe even more than 1 million shares, that drove down naked shorting PSLV. And the rumor behind it is that the reason they're doing that is to disincentivize not only investment in silver, but when there is a increase in demand in something like PSLV, they have to go out and actually purchase silver for the trust. And if you have all of this shorting of PSLV that is greater than the demand in PSLV, they don't have to go out and buy more silver. So they can short the share. And I was, looking at shorting. I found it interesting. And people should think about this in terms of the great taking, in terms of the difference between something like PSLV, which can be shorted, versus holding it yourself. This is SEC Rule 15C3-3. In the United States, the Securities and Exchange Commission regulates rehypothecation through Rule 15C3-3, which limits the amount of a client's securities that a broker-dealer can rehypothecate to 140% of the client's debit balance. So, they can take everything that you have plus another 40%, and it can be shorted. So all of these shares that are then borrowed are shorted. They drive down the price. They have to, at some point, buy those shares back. But at this point right now, where there's so much demand in silver and they're still trying to keep the price down, this is a very dangerous time, and they're using PSLV as a tool to hold it down. I also found it interesting. I found a statement when we think of maybe the prospects of where silver could go from Donald Trump, and it stated 1/17/2017. Silver is the most undervalued asset on the planet. It's been money for all of human history, and it sits at $16.50 an ounce. Sad. So yeah, it's doubled since then, since 2017, and arguably still rather undervalued. And this is the way that they manage the price. Things like the ability to massively short PSLV to keep the trust from going into the open market to buy more silver, which pushes the price up. I found it interesting, a tweet from Max Kaiser the other day, who is the Bitcoin maxi, has spoken out against gold for a long time. He was a gold bug for a long time, completely shifted. Talking about stablecoins. He says a stablecoin, and this was just, he tweeted this on March 22nd, a stablecoin backed by gold would outcompete a U.S. dollar-backed stablecoin on world markets. Russia, China, Iran should take note. I would argue they are, and they have been. That's the whole concept of the unit settlement currency, which do not think for a moment that's gone. It would track inflation. The U.S. dollar does not. You're guaranteed to lose purchasing power in the U.S. dollar. The U.S. dollar has no volatility, but again, you're guaranteed to lose purchasing power. Bitcoin is deflationary but volatile. Gold tracks inflation and is minimally volatile. Why wouldn't Russia, China, Saudi, and Iran do this? Well, they are. I think they are issuing they are dealing more in gold than they are in U.S. dollars. That's the whole concept of treasuries being dumped and gold being acquired. I found it interesting to come from Max Kaiser, this little tidbit. I saw another tweet that it was interesting because there are some people that I respect that I wouldn't think would say they agree with this, but they did. I'm gonna leave out the people who agreed with it. I just don't want to go there, but suffice it to say, it says, the tweet was, it seems the whole point of Bitcoin was to provide liquidity for U.S. treasuries and quell domestic demand for gold, while preparations were being made for a gold-backed U.S. treasury note, including, most importantly, repatriation of all U.S. leased and rehypothecated gold. Well, let's think about that for a moment. We're seeing the gold come in at levels no one has ever seen, and a lot of it probably was leased out gold and rehypothecated gold. We're seeing it come and flood the COMEX market to levels that no one has ever seen before. You and I have both interviewed Judy Shelton separately, and we know the whole premise of her thesis is to back treasuries with gold that would be redeemable. And certainly a lot of the demand that would have gone into gold in this environment has arguably gone into Bitcoin. While I'm not saying I agree with it, entirely. It's a compelling thought process, to say the least. And when you talk about all of this talk of stablecoins now, including Max Kaiser, it is the stablecoin market that is picking up the slack for the lack of central bank purchases, which net since 2014, there's not been one U.S. Treasury purchased by central banks since 2014 net. Yes, there's been a lot of buying by central banks, but more selling than buying since 2014. And the stablecoin market, which is now almost entirely backed by U.S. Treasuries, is providing a major source of demand for the Treasury. So lots of things happening under the under the seams, and who knows how it all plays out. But when you see desperation, like, a million shares dumped onto the market and shorting PSLV at the open to keep them from going into the open market, it's worth pondering. A couple other things, and then I'll take any questions if there are. We can say goodbye. I found it very interesting that four of the biggest property and casualty insurance companies in China have joined the Shanghai Gold Exchange as full members. Costs a few $100,000 to become a full member, but they are now. And if they take just 1 or 2% of their assets and put it into silver, the sky is the limit. There are things happening, and they're beginning to accelerate, no question about it. And so I guess, look, maybe this is why we're seeing the smart money, whoever they are, shifting to precious metals. And institutional investors have increased their gold positions by over 40% in the last 3 years. So maybe that's why the metal has outperformed the S&P 500 over the last 24 months, really over the last decade. But suffice it to say, things are beginning to accelerate. And, I think the worst thing you can do is get too caught up in the market daily moves, down 15 one day, down up 15 the next. The numbers are bigger, but the percentages really aren't. And if you look at what I said earlier, that in the last 213 days, we've seen gold go from $2,500 to $3,000. That's the fastest $500 price jump in history. But in essence, you're only talking, under a 15% or about a 15% gain, just over 16%. It was up 40% last year or thereabouts. So as the numbers get bigger, it kind of skews the percentage drop. And, so pay attention to that. Yeah, that number is big, but the percentage move isn't the fastest move ever. But the amount of dollar increase is. Anyways, lots of crazy things happening, and I think it's literally just beginning. In an interview I did with David Hunter this morning, he thinks that we'll see a blow off here very soon, a blow off top in the equities, and then a collapse, a full out collapse in the equity market in everything, leading to a commodity super cycle where he's predicting, silver at 500 or 750 and gold at 20,000. Who knows where these things go, but then again, I will tell you that the positioning by the biggest money in the world is continuing. The deliveries are continuing, and the lengths at which they're going to not allow this to blow off yet, in looking at PSLV, seem to not be waning as well.